Hello out there, dividend growth stock investing friends. It's Colby the DGI Crab coming at you with a quick video here on Thursday. I just thought I would dedicate this one to showing you my specific stock purchases for the week for the DGI Crab portfolio. For the DGI Crab portfolio that I started just a few weeks back, maybe pushing a couple of months now. I've been doing $100 consistently at minimum every single week into this portfolio. Hopefully in 2025, I'll be able to do a little bit more than $100 a week into it. I'd like to do more like two, but as you may have or may not have heard, I did purchase a vehicle because my old one completely bit the dust last month. And until I'm able to get that car paid off, it's probably going to be a little bit of a stretch for me to do too much more than 100 into this portfolio, unfortunately. But the goal is to have that paid off here within the next few months. Definitely grinding, working a lot of extra time in, and I think I'll be able to get that cleaned up so I can really start hitting this portfolio a little harder. But no matter what, $100 is going to go into it every single week. And as you can see here, the theme for the week here is thin to win. The DGI Crab portfolio now has a total of 10 positions in it, and with that $100, I spread that around and added a little bit to those 10 positions, including a new one. What could that be? Well, let's jump in and take a look at it. So the new position for the portfolio is actually going to be Johnson & Johnson. Johnson & Johnson is one of my top 10 favorite stocks. So when the current day yield, gets 20% higher than the 4-year average yield on any of these 10 stocks, I will jump in and purchase those particular stocks. Even if it's just a little bit of money, I want to add to these positions so I can have good, strong positions, hopefully in all of them by the time that I reach that retirement financial freedom goal. Pepsi was another one in my top 10, 2 out of the 8 that hit that buy zone threshold for me. So those are 2 stocks that I was very excited to add to. Now, in case you're new to the channel, this channel's all about age and time horizon as the primary focus for investing. I have 60 individual dividend growth stocks that I track very closely. They're split into 4 separate tiers based on the age of the investor. Now, for me, I am in tier 2, which is age 31 to 41. And when I do my investing, I put at least half of my money into age-appropriate ETFs. These are the 4 I've selected for Tier 2. All Vanguard funds, by the way: VIG, Dividend Appreciation; VOO, S&P 500; VBR, Small Cap Value; and VYMI, non-US or international high dividend yield stocks. So these are the percentages or allocations that I do. So 25 went into VIG, 15 into VOO, 5 VBR, and 5 VYMI. And as for the stocks, as I said, Johnson & Johnson, here's the portfolio here. I do hold Johnson & Johnson in my primary brokerage, but now I have started a small little position here in the Fidelity account that I use for the DGI Crab portfolio that I'll show you each and every week, where I put my money where my mouth is and invest my money exactly as I say that I do in each of the Friday videos where I look at undervalued stocks in each of the 4 tiers. So Johnson & Johnson started that position here just with a little $10 investment, not anything too crazy, but so long as it stays in the 20% or more undervalued by my metrics, I'm probably going to continue to put at least $10 a week into Johnson & Johnson. Pepsi, you can see here, I also added $10 to that position as well. And then I already covered the ETFs with VIG, which got 25, VOO, which got 15, VBR, which got 5, and VYMI, which got 5. And then I rounded it out with some other choices here. Hershey, in my tier 2 category, added $10 more to that. Hershey is the largest position in the portfolio still in terms of the amount of dollars invested. It's up to 225 right now. Now, I would imagine that because VIG gets 25% of the money every single week, no matter what's going on, it's probably eventually going to catch up and surpass Hershey, because Hershey at some point is going to recover and it won't get quite as much of my focus. But for now, it's still the number one invested position in this particular portfolio. I continue to trickle a little bit of money into Nike, $5. Uh, Target got $10 for me this week, and Archer Daniels Midland got $5. And you can see over here in this column, I total up the added annual forward dividend income that each of these small purchases has added to the portfolio. And in total, I added, with my $100, exactly $2.50 of annual forward dividend income. Little bit higher than my overall yield on cost, not too much higher. This has been pretty consistent. I've been pretty much in the mid 2.4 range ever since I started here, which is exactly where I want to be in the tier 2 investing category. Usually in tier 2, I'm looking to add somewhere between 2 to 3% in terms of starting yield, and I want an overall cumulative growth rate to be in the high single digits. So hopefully at least 8%, if not 9 or even 10 year over year dividend income growth. The annual income, not quite up to $20 just yet, but definitely getting close. I'm clearly going to go shooting past that next week. Overall, portfolio's down just a little bit, not a whole lot, just a few dollars, primarily because I've been, again, putting most of my emphasis on undervalued stocks that just haven't had their recovery story just yet. Let's see here. The largest individual stock position that I've invested in up to this point is I'm up to $50 now in Pepsi. Definitely going to keep hitting Pepsi week in and week out while it remains in my buy zone. And then a lot of these other ones at about 40 or at ADM's case 35. Haven't built up a huge position in this just yet, but what I want to show you here with this portfolio is that even if you've only got about $100 a week that you can invest, whether you're getting that money with the side hustle or working a little extra or just simply cutting back on some more frivolous expenses in your budget, if you could scrap together $100 a week to invest, you will, over time, build up a nice stream of passive income for yourself that you can lean on in retirement to help pay the bills. And even when you get to the point where you're not reinvesting dividends anymore, because the annual growth rate, at least in this portfolio anyway, should be in the high single digits pretty comfortably. Even when I'm not reinvesting dividends, I should continue to receive raises on my income year in and year out. So far, Hershey is the only thing that I have a full share of in this portfolio so far. But next week, I will go over a full share in VIG, which will be a nice feeling. And everything else down here is still just in the fractional shares. Still, pretty small amount of income overall. That J&J position at just 33 cents a year isn't going to do a whole lot on its own right now. But again, this is a long-term portfolio where I'm going to be reinvesting all dividends in the underlying investment that paid them out. And because this is still a very new portfolio, I actually have yet to receive a dividend payment as of right now, but those are definitely going to start coming in here this particular quarter because the Vanguard funds are all going to be paying out fourth quarter dividends here later in the month. And there's a few other ones in here that I believe should as well, like Nike. I didn't hit the ex-dividend date on J&J, so I'll have to wait a little bit on that one. But my yield on cost is going to start increasing as dividends start coming through, because as of right now, like I said, I haven't gotten any yet. So because this has been about my yield on cost every single week, it's staying very consistent. But that is going to tick up as the drip starts to do its thing for me, in addition to the new money I'm putting in. So, like I said, putting my money where my mouth is, and I'm wanting to show you that you can build up a portfolio, even if you're just putting in about $100 or so at a clip here and there. You can build one up Don't worry about just having fractional shares. Just get yourself a brokerage like Fidelity or Robinhood or SoFi, where you can have the fractional shares, have the drip reinvest for you, and it will slowly but surely build up over time. Hopefully, this is encouraging to a lot of you out there. And obviously, I spread this out pretty thin with 10 positions overall. But I'm not necessarily somebody that's really worked up about overall number of positions. You're going to have, with my particular strategy, and again, not investment advice, you should do your own due diligence, research stocks on your own as well, make your own choices. But for my particular strategy, because the ETFs are going to be a cornerstone of the investment, I'm going to have automatic diversification no matter what. But what I don't want to do is invest in individual stocks when they appear to be overvalued. I'm looking for a discount. And if I have multiple stocks that look like they're trading at a discount, then I'm going to spread that money around a little bit because, hey, I might be incorrect on a stock or two in here. Maybe there are some that aren't going to have a rapid recovery story. And hopefully there's going to be a lot, or maybe most all of them will have a recovery story. But when it comes to the individual stocks, so long as I'm buying them when their yield is comfortably higher than their 4-year average yield, then that's the primary goal for me. So whether I've got just 3 or 4 individual stocks or, a couple of dozen of them over the course of a long period of time, that's fine for me because I'm buying them all when they're down. The theory is that the majority of them over the long haul are going to look like some pretty big winners. So that is the video here for today. Be sure to tune back in tomorrow for the regular Friday video that I'll put out at the end of the trading day, where I'll go through each of the 4 tiers and take a look at where the value lies in each of those particular categories. Keep investing, everyone. Let's go get that dividend income.